with you. We have a query coming in from Vikas Negi. This one is on L&T Infotech. Now, they're asking what is the right level to enter this stock? Would you be recommending a buy at current levels?
So if you have a longer term kind of a time horizon and slightly high risk appetite, then I believe you can start nibbling at current levels of 4,200 to 50 for L&T Infotech. Now, when you look at the long term charts, the stock has corrected very sharply from those 7,500 levels to, I think, till last week or so the stock was sub 4,000 levels as well. So it's been a sharp 50% correction. Typically a 50%, 60% correction is a zone where long-term corrections, they end up and you see the stocks getting into a gradual consolidation and then a start of a fresh trend emerges for those stocks. So price-wise, I think it's a very attractive level, but the only concern is with respect to time, because possibly the consolidation is yet to happen for these mid-cap IT names. So if you have a longer-term time horizon and can hold these stocks patiently, then I believe you should start nibbling at current zone.
All right. We have a question coming in from Aarti, and this one's also for you, Kunal. She's saying that she wishes to buy Minda Industries and Orient Electric. She's asking what the entry price for these couple of stocks could be, whether you suggest a buy first of all in both of them, and she's looking for a 1-year time frame.
So I think out of them, Minda Industries, it's something which is looking attractive. It's still holding on to its 200 DMA. I think it's in the last, one and a half odd month as well. It's been fluctuating around this 200 DMA, 900-ish kind of a zone for itself. So plus minus 5%, 6% has been the broad range for the stock. As compared to Orient Electric, the stock which is down, I think now 60 rupees or 65 rupees from its 200 DMA. So that itself tells you that there has been a divergence of more than 20%, and that's a sign of a weaker stock. So relative to both of these names, I believe Minda Industries is something which looks attractive. I would suggest that as a buy.
Okay. Vijay, coming to you, we have a query coming in from Rancho Gupta. This one is specifically for you in terms of Indian commodity companies. What is the outlook you're seeing coming in over there? Is there any way one can take an advantage given the current scenario?
When you say commodities, there are metals, which are metals, there are precious metals, there are oil and gas companies. So I think that, as I mentioned in the Indigo bite, that I think that either inflation is topping out or it might top out soon. So again, we are in a very long-term commodity bull run, and lately we had a very major international company which had published that we are in a 30-year bull run in case of commodities. So it's a great time to accumulate stocks like Hindalco, Hindustan Zinc, Vedanta. So I'm fairly bullish. SAIL, which is available at 74, 75 rupees, National Aluminium, Hindustan Copper. These are great companies with great cash flows. And mind you, if you look at the price to earning of each of these, they are below 5 or 6. So again, huge cash flows which are backed. And I think that the world has seen that India is definitely a better partner than China. So due to the recent export ban on steel, we saw a crack in the steel companies. But again, these are the times to accumulate. So if you want to buy great companies at a great price, so you can definitely invest 25-30% of your capital and keep on accumulating these good companies with great cash flows and great businesses and great management. So I'm fairly bullish on the commodity companies. Same with oil and gas. I think that Reliance gives a great opportunity even at these levels, because I think that there is a demerger in the process, which we might listen to, or we might witness in the coming times. So there is Reliance Jio, there is Reliance Retail, there is the Petchem business. So all these three businesses have very deep intrinsic value. So I think it's a good time to accumulate commodity companies for the longer term.
This next question is something that a lot of our younger investors should pay very close attention to. We've got Captain Ramrao Ranadeve, who's writing in from Pune, and he bought shares of Tata Elxsi 3 years after I was born. He bought it at levels of 8 rupees per share. And the stock, let's pull up the chart and see where it's currently trading. He's been holding there for quite a while. He's holding about 450 shares right now. The question he's asking, and Vijay, this one's for you, should he keep holding on to this like family jewels? And what should he do? What should his strategy be?
Well, I think that he has much more wisdom even than I have. because we being analysts and we being right in the front of screen most of the times tend to be very excuse me, tend to be very, we buy and sell stocks, we are impulsive at times. But this gentleman has kept the very good patience from 8 rupees to 8,600 rupees. And I think Tata Elxsi is one company which can even go up to 10,000 and 15,000 in the coming times. So it has a good business and it's backed by a great name and a great, corporate governance. One more thing that, Tata Elxsi primarily gives back-end support, designing support to the auto part of Tata Group. So it would be a great company to have in a portfolio with a longer term perspective. There might be blips, the stock might come down, but again, any good stock would come back sharply. And I always say that good stocks are like tennis balls and bad stocks are like eggs. So it's a great stock, it's a good stock, it's a tennis ball. Keep on having it in the portfolio. If you don't need money, I think that it is heading towards 10,000 and then further.
Okay, surely keep holding it is what Vijay is saying for Tata Elxsi. But Kunal, coming to you, next query is on AVT Natural Products. Now, Mukil from Bangalore has around 1,000 shares at 95 rupees per share. What would you suggest would be a short-term immediate target for this stock?
Well, you can continue to hold on. Possibly 90.5 could be a stop loss for this trade. That would also mean the stock taking support at 200-day moving average, as well as the last 2 weeks of price support for itself. So keep that as a stop loss, and assuming if the stock gets into a recovery mode, say over the next couple of weeks, then you can look at maybe a possibly 108 to 110 as a near-term target for AVT Natural Products.
Okay. The next one's coming in from Chandan Jain, and he's writing in from Hubli, Karnataka. He's asking about Hindustan Aeronautics. He got allocation during the IPO stage, and again, so therefore he's been holding for a while. He's wondering, Vijay, should he hold for the long term? We've got some big news for Bharat Dynamics today. Defense space seems to be buzzing yet again. Would you say that Hindustan Aeronautics should be held on to?
Post the Ukraine war, the smaller countries are looking towards India for their supplies. And the government of India is also, I think, very bullish on making India a defense hub for the world. Of course, we cannot supply to countries like US or maybe the developed world, but yes, there's a lot of smaller countries which look at India for defense supplies. So HAL longer term, I think that it can be kept in the portfolio. If somebody is a trader and a shorter term investor, so it has moved quite a bit from the 50 DMA. So if it touches around 2,000, it won't be a bad idea to book profits here. And maybe you can get into the stock again if it is available at 1,600 or 1,500 order. So keep on booking profits. These markets have also taught us to book profits. But yes, longer term, I don't think there's any issue. It's a Government of India company, and it's a fairly stable company. So long-term investors, no problem at all, keep on holding. But yes, short-term ones should book profits around 1970 to 2000 levels.
Vijay, one more query is coming in actually on Bharat Dynamics only, the defense side only. So here we have Vishal from Dubai who's asking about entering Bharat Dynamics at current levels with a 1 to 2 year time horizon. Would you be suggesting that also in this space?
Well, I would recommend that don't get into BDL, get into a BEL, which is, BEL has not moved much. And again, it is also one of the companies into the defense space. So I think that BEL has the potential of going up to 270, 280. So, you can probably, shift from BDL to BEL if you want to get into the same afresh, because BDL has moved up considerably and it might correct.
Fair enough. Reliance Industries, Kunal, we've spoken about this off and on. This is a question coming in from Kunal Thakkar. He's writing in from Mumbai. He's asking about the Reliance June contract, 2800 call. Is this a good time to buy right now?
Well, 2800 call could be a bit far-fetched. So what happens is you have to look at the market construct. Now the IVs are into a dropping kind of a mode. So we've seen the IVs dropping sharply from 25 levels to 2021 where it's currently trading. Now when you are into a drop of an IV kind of a zone, a deep out of the money call option may not give you good returns, even if your view turns out to be right, because the stock has to do that extra hard work to try and compensate of the drop in IVs. So always remember that when you are trying to bet into a large cap stock, stable stock like Reliance Industries, it makes a lot of sense to buy at the money or very close to at the money, slightly out of the money kind of an option. So I would suggest that if you can probably look at maybe a 2700 or 30, 40 kind of a strike for Reliance, that would be a much better play, because the chances of you making money as well as the drop in IV could be far less, and the chances of you making money out of this option could also be pretty much quick and fast.
Vijay, we have a query coming in from Vivek, who's from Dubai. Now, this is on Motherson Sumi. They're currently holding 900 shares, around 234 is what their average price is. Should they be further looking to average out at this point or continue to hold for a long term?
Well, I think yes, it could be averaged because it has done always 100. So it won't be a bad idea to average it around 128, 125. And I think that we are seeing signs of revival in the auto sales. The auto sales numbers across the world are getting better. And with China opening up post this COVID scare, I think that sales in China would also pick up. So I'm fairly bullish that companies which are auto ancillaries, which support the auto industry, they should also do well in the longer term. So we talked about Minda. So Minda is also one of the better groups. So Minda, JBM, Motherson Sumi, these are good companies in the auto ancillary space, and Lumax. So these companies can give you a good return over a period of next 1 to 2 years. So not a bad idea to accumulate at these levels, because these are dirt cheap levels for a company like Motherson.
Just stay with us, gentlemen. In fact, it is time for us to take a quick break on this show. But viewers that have already written your queries in, do stay with us. We're going to take queries even after this break. So stay tuned.
Stopping fire from spreading is...
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. What can anybody add to that?
numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone... Welcome back. You're watching Buy Now, Sell Now, and we're in the midst of the viewer query segment. If you've got questions for us, do send them on any one of our social media platforms or indeed on WhatsApp. I want to take a question coming in from Vijay, and this one is on the benchmark, both the Nifty 50 as well as on the Bank Nifty. Vijay, from what he's looking at, he's saying that, Kunal, he doesn't see the Nifty sustaining above 16,650, at least in the near term. And are we moving towards 16,350 to 400 in the very near term?
So I would believe that possibly the markets are hinting towards a consolidation, and post-consolidation we can expect breakouts on the upside. So my view is that possibly we could be looking at 16,800 to 17,000. Now even if it's a bounce back or a dead cat bounce or a rally in a ongoing bear trend for the indices, we've seen that there has to be a phase where the markets get into a euphoric kind of a zone. Indicators have to come back into overbought. There are so many sectors which are still witnessing a lot of short positions. So for a market to get into a phase where we tend to come back into a resistance mode, there have to be a capitulation of shorts from majors, majority of the sectors, and that includes the likes of IT, metals, pharma, etc. We've not seen that happening or shaping up, at least over the last 2 to 3 trading sessions. So that's why the bias is still on the upside, with indicators looking strong, with the price action looking robust, and the index still holding on to those support levels. There is a high degree of probability as well as a chance that we may move up higher.
Okay, Vijay, coming to you, we have this next query coming in from Balan. Now, he's holding Anant Raj Industries at around 55 rupees per share. Should they continue to hold this stock or shift to maybe an IT or a banking stock?
Well, I think that real estate also should benefit. Now with the cement cartelization, the government has come heavily on cement companies, on the steel companies. And these two are major levers, major components of infrastructure and real estate development. Most of the developers stopped working or stopped, working on the projects, and because the input costs were pretty high. So if you look at the overall steel prices, they have come down about 20% from the highs, 20-25%, and cement price too are starting to cool off. So this is going to be a great respite for the builders and the real estate players. So I think that good companies you can look into. Look at Brigade, look at Suntech Realty, look at Oberoi Realty, DLF. It's better to be in the larger builders than the smaller ones. Anantraj, although has a very good land bank, and they had sold a parcel about 60 acres to Blackstone also. But I think that, they are not on the development side as of now. I'm not seeing much development happening. So be with the builders who are doing some decent work. Also, the top rung companies like DLF would be the first to revive. And DLF has announced lately that they are not going to be in the middle income or the in the middle income segment or the mass market segment. They are going to cater to the premium segment, which has a lot of money. And let me tell you, in Delhi, NCR, and wherever DLF is having its projects, DLF is able to sell the project 100%. So there is no inventory backlog with company like DLF, and they have seriously done some good work as far as their debt overhang was there. So they have brought down the debt considerably. So I think DLF, Suntech Realty, Oberoi Realty. So be with the top run companies, and I think that these companies would pay off if somebody holds with 1 to 1.5 years perspective.
Vijay, what I'm hearing is that Delhi is the place to be because that's where the money is. People are buying high-profile flats, and maybe we should consider doing that as well. But I'm stuck in Mumbai as of now. But let's talk about delivery. I'm coming back to you on this next one. Tina, who incidentally lives in Delhi, is asking this question. And she's asking whether this is a good time to buy the stock. It's a newly listed counter in the logistics space. Would you say that it can be held for the long term?
Well, I don't think so. If somebody is getting some profit at the table, so it's better to book profits. With all these new age companies, although the revenues look very good on the books, but where is the profitability? And in the longer run, let me tell you, the profitability would sustain. We have seen companies in NASDAQ, coming down 40-50% in a day. Companies like Tesla have corrected. There are several tech companies, Zoom, etc., in NASDAQ which have corrected. Even in India, look at Paytm, PB Fintech, Nykaa. All these new age companies have not been respected by the markets at all. So I would say that be with stronger companies. If you want to buy for the longer term, go with the Hindalco. I think that the stock can go up to 700, 800 also if somebody holds with 2 to 4 years perspective. So go with companies with great cash flows and you will never go wrong. So it's not about punting. The new 5.5, 6 crore people who have entered the market, unfortunately they are stuck with a lot of positions which they will never be able to come out. And markets are here to make money and not to destroy. So I would recommend through your channel to be with companies with great cash flows over a period of time. You are going to make money in the markets, and money is made, but only for those who are wise enough to pick up the right stock, and the choices matter.
Absolutely right, Vijay. Kunal, coming to you, the next query is on CAMS. Akshay wants to know the technical view coming in over there. How is it looking like in terms of charts and entry level?
So I think it's an excellent chart when I look at it as a setup from a longer term play. And the reason for being it the stock being more attractive is the way the stock has corrected from its previous high. So CAMS was one of the few stocks post listing. I remember it had gone to almost 4,000 levels for itself, and then the correction seeped into the stock price in the last 5-6 months, and it's halved or corrected by 50% from those levels. So when we look at the scheme of the long-term charts, the correction, the price levels are very, very attractive. But CAMS, CDSL, BSC, these are the kind of names where one requires patience and has to bet on India from a longer-term play. You can't expect that these stocks may get into a turnaround mode from a very short-term play. If you have a time horizon of 3 years, 5 years plus, then I believe at current levels of 2,200, 2,300, CAMS is a very good buy.
Okay. This is an interesting question coming in from, we've got Sunny who's asking this. CMS Info Systems is the name of the counter, and he's got at levels of 253. He wants both. I think he's also looking at a fundamental view, if you have a view, Vijay, but I'll come to you in just a short while. On the charts, he's asking what the short-term trading strategy should be, but he's also pointing out correctly, I might mention, that the promoter has 100% pledge on its shareholding and what the implications of that could be. But I'll come to you, Vijay, on that after the trading view.
So I would suggest an avoid, Alex, on the CMS Info. Now, the reason for avoid is the lack of volumes into these kind of names. I think the daily volumes is just about some 40-50,000, and that too, it's very, very illiquid. The impact cost is also very much high. There's no major trend which is shaped up into the stock price. I think last 2-3 months back, the stock was at 275-300 levels, and then from there it's corrected back towards 225-230. So it's a sluggish chart, lack of volumes, would suggest an avoid.
Okay, what about the fundamentals then? Vijay, do you have a view on the stock, or just the fact that the promoter shareholding has been completely pledged?
Well, anywhere, in any company, if there is 100% promoter pledging, so it's an alarm. And people should be wary of such companies where the promoter holding has been pledged and the pledge percentage is very high. This means the company is heavily leveraged, and so there is definitely a cash flow issue. That's why the promoter is going for. And this is only the stock pledge. We really don't know from the grey market or from the parallel. People have raised debt apart from banks as well. So it might create a lot of flutter in the balance sheet. So better to stay away from such companies. And if you have a TCS or an Infosys or a Wipro available at such wonderful valuations, why not shift into the bigger companies which have tons of cash on the books? So I would recommend that, get into a TCS. These are good times to accumulate great stocks and get out of CMS info systems and stock like these where, you're not even sure. The promoter is not sure about the company. That's why he's pledging all the stock. So I would say avoid, completely avoid, exit.
Okay. Kunal, coming to you for the next one. We have a query on dollar industries. Mitali wants to know whether it's a good time to enter in dollar industries. Is it a good investment?
So it seems like, again, a stock which has done steadily well over the last 2 years from the pandemic lows of, I think, 100, 110 for dollar. It's now climbed up to, I think it went up to almost 650. Now it's back sub 500 levels. Very attractive zone. The stock is also very low beta, moderate beta kind of a stock. Tends to get into very strong periods of uptrend, and whenever there is a correction in the market, we've seen that the stock gets into a range-bound kind of an action for itself. So a strong stock, more from a longer-term play, would suggest a buy at current levels of 497,500.
All right. This next one, I believe, Vijay, you had said that you have a buy on Hindalco, but this is a short-term question. It's coming in from Yatindran, and he's asking Kunal on this counter. If I'm not mistaken, again, this is one of the counters that had RSI slip into single digits. Am I right?
Hindalco, right?
Yes.
Yes.
So what's the view on the short term?
So I think on the short term, so the RSI bounce has played up. So from 380-85 levels where we spotted the deep oversold nature of RSI for Hindalco, the stock had zoomed up to almost 430-440 in a matter of, I think, a week or so. That jump of 15%, 10% shaped up for Hindalco. But now when you are looking to buy, so the first level of a rally is where there is a correction of the oversold nature of indicators. The second leg of the rally is where a trend starts. That is generally, that generally happens when the prices break past above the previous levels. So I would suggest that if you're looking to buy Hindalco, wait out for that 430, 440 levels to be taken out. It's absolutely fine that you're buying maybe 20, 25 rupees higher from current levels, because then you are with the trend and with the flow in the stock price. So I would suggest that wait out, let the stock cross that 430, 440 barrier, then buy for a target of at least 10 to 15% further higher from those levels.
Vijay, Mubarak wants to know about Sigachi Industries. What is the long-term view coming in there?
Well, I think that post correction we have seen, Sigachi is a good company, and I think that if this somebody holds on with a longer term perspective, there is money to be made here, and quite possible that this stock might show some promise, and we might see it coming back to 350, 370 odd levels. So seemingly it's in a good specialty chemical industry, and this is a growing industry according to me. So definitely you can buy and hold on to it for a longer term perspective as well.
The next question is on Metro Brands. Again, a new listing. You have Tushar, who's got allocation in the IPO, and Vijay, if I remember correctly, the Q4 results were actually quite good for this company, and the management seemed quite confident about sustaining that track record. What's the view on the fundamentals on the long term, though?
Well, if you look at the entire retail space, this was practically dead in the last 2 years. None of the shops were open. People were not shopping. But yes, with the opening up theme, and now everything is people are now going out buying. So I think that this stock can come up, a bit, maybe 650, 700. But that would be the place where you should book profits as well. The stock price to earning is pretty high, 79. So I am not very comfortable with high PE companies. Although this is a good brand and a good company. But yes, I think that there's a limited upside. So around 650 to 700, you can book out and get into some other fundamentally strong company.
Okay, and with that, it's time we start our rapid fire segment. So, Kunal, I'm going to come to you first, and we have a query coming in on United Spirits. Padma wants to know whether she should buy United Spirits and actually sell All Cargo Logistics, where she's making a loss, and this is for a short-term view.
No, I would suggest that if you can probably hold on to all cargo logistics and probably put in additional fund and look at buying United Spirits, that could be a much better play.
Fair enough. Coming to you, Vijay, on the next one, quick view on the sugar space. RK wants to know a couple of stocks or 3 stocks that he can buy.
Well, I think if you want to buy 3 companies, Rampur Chini is one of the companies, EID Parry is one of the companies that have, and about, I think Mavana is also a good company portfolio. Apart from this, there are other Bhagat Sugar and Bud Sugar. These are primarily Birla Sugar companies. So these two companies are also very good.
Kunal, coming to you, next one is a query coming in from Harshil, who's from Hyderabad. Wants to know whether they can buy Zomato at the current price.
I would suggest that yes, I think the stock is getting into a turnaround mode. I would suggest that you can look to buy, and buy on dips could be a much better strategy from current levels.
IEX is the name of the next counter. We've got Professor Thomas George from Ernakulam who's writing in. Is this a good buy at the current level?
It seems to be at 194, it's a good buy, but if you're looking at it more as a trading play, then I would suggest wait out for 203 to be taken out. Once that happens is where I believe the stock should get into the thick of momentum.
Vijay, the next one is for India Cements query. Nachi is asking, they've purchased 25 shares of India Cements at around 230 rupees. Should they average at the current price for a long term?
Absolutely not. I think that even the charts are not looking good. I think there's a death cross which is getting made. So better to be in a company like ACC or Ambuja if you want to be in the cement space.
Okay. The name of the counter is Zydus Life. We've got a question on the futures. We've got Manikandan. Who's trying to, why don't you, I'm not sure about the question, so Kunal, can you say what the strategy should be here?
So I think for Zydus Life, it's an interesting chart, on the long-term play. The weekly and the monthly charts are actually showing sign of a turnaround, and possibly the stock getting into a multi-month, multi-quarter, as well as a multi-year uptrend. So good time where you can look to buy.
Kunal, the next query is on Timken India. Sapna wants to know whether it's a good stock to hold for a long term.
I think it's an excellent stock. Even in this kind of a market, the stock is making a fresh 52-week high for itself. So that tells you the kind of quality of the stock. I would definitely suggest a buy or a hold.
Okay, I think we're completely out of time on this edition of the Buy Now, Sell Now queries. But Vijay as well as Kunal, thank you so much for joining in and for answering all the questions that you did answer. Viewers who've sent their queries in and have not gotten an answer today, a couple of you, I will promise to answer first thing tomorrow, but everybody else, we can only pin so many chats, unfortunately, so you're going to have to post again tomorrow. We will attempt to take as many questions as possible. We have to slip into a very short break, but there's more on the other side, so do stay tuned. Is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy. Only on ET Now.
With each passing day,